Ladies and gentlemen, welcome back to the channel. The S&P 500 as well as the Nasdaq are up over 0.5% at the time of recording this video, but a lot of stocks are not faring so well. A lot of stocks are down today, including AMC that is down slightly on the day, less than 1%. About 0.5% negative. Now, on a technical basis, AMC is looking beautiful still, and this really every single day that we remain bullish on a technical basis makes me that much more bullish, because in the end we have been going down day after day after day. A lot of this rally has lost its legs, but AMC stock still remains very resilient. And I'm even comparing AMC to other stocks that had good earnings, like Square. They had great earnings, but they are nowhere near where they just were a couple of days ago, a couple of weeks ago, whereas AMC, it's holding up a lot better than other comparables. And the longer AMC holds up in this bullish technical formation, the more bullish I have to be on the stock. We are still getting bullish technical indicators as well, like the CCI that just turned positive and gave us a bullish indicator about 2 days ago, guys. So we have a lot to talk about in this video because the bond yields are shooting down. Stock market by and large with the indexes are shooting up, but we have some major Fed speakers coming here in just a couple of minutes, as well as obviously tomorrow the big catalyst from the Fed, and that's where things could get a little bit crazy, guys. So let's get straight into it. And first things first, what is causing this bullishness for the broad indexes? Really, today is bond yields coming down. Now, why are bond yields coming down? Well, a lot of it has to do with what you got from Fed speakers as of yesterday. A lot of Fed speakers, the ones that we did hear from that are voting members, were talking about, yes, we do need to slow down the pace of rate increases, but also the terminal rate would be 5 to 5.25%. This is a lot different from Fed Bullard's 5 to 7% range for the terminal rate. And I think that is one of the biggest deciding, if not the biggest deciding factors here in the near term, if we continue this rally or not in the broad markets, is where do we get indications the federal funds rate terminal rate is going to go? If it's 7%, you're in for new lows in the stock market. If it's 5%, that could be bullish because we're already expecting that, right? And if you're already expecting something and you get that news, it's not a big shocker. So that's what is going to be so important about tomorrow's data. And another aspect of this rally today is simply, don't look too much into it, it's the rally before a bad day or before a potentially bad catalyst. You see this a lot the day before CPI or the day before a jobs report. The markets will be up a lot, and then a lot of the time in 2022, they will give all of that back the next day. Not necessarily saying that is going to happen, but it is a reason why the markets are up today. So bond yields going down, that is definitely good, and that just means TLT is going higher. The dollar is also down about 0.5%, which is very positive for company earnings and fundamentally for the stock market. And I'm sure by now you guys know the correlation of when this chart goes up, when the dollar goes up, stocks tend to go down, and the correlation with the bond chart, when the bond prices tend to go down, then stocks tend to go down as well. That just means bonds are going up. It's like a dividend stock. That's the best way to imagine it. Nonetheless, the dollar being down today is fundamentally positive for the stock market, and that's a big reason, again, why markets are up today. But we do have some Fed speakers that are starting to speak right now, as well as throughout the rest of the day. So today you already had Fed Mester that spoke, and that was not a huge deal. It did give the markets a little bit of that bullish sense, right? That more, like I said, reiteration of that 5% terminal rate. But then you got Fed George that speaks at 3:15 p.m. and 3:45 p.m. you have Fed Bullard that speaks. And Fed Bullard was the guy that said 5 to 7% federal funds rate. He is looking to be the most hawkish member, a part of the FOMC as of right now. And depending on what he says, that could definitely move the markets. But the main focus of the markets is going to be durable goods orders month over month for October, coming out tomorrow at 9:30 in the morning. It'll actually come out at 8:30 in the morning. This does appear to be still an hour behind. New home sales will come out at 10 a.m. for October, Michigan Consumer Sentiment Surveys, and all of this will be important, but the big catalyst for tomorrow, the big data point, is the FOMC minutes, and that comes out at 2 p.m., and it's going to tell us exactly kind of what the Fed is thinking, right? Why they did what they did at the last Fed meeting, why the initial reaction, the initial transcript was so bullish that came out to the markets, and the markets rallied, and then Fed Jerome Powell came out and shut everything down. We're going to get a little bit more clarity on why that happened. The markets also want to see Fed members descend, so they want to see essentially some Fed members vote against doing a, say, 50 basis point rate hike coming at the next meeting, or even the last 75 basis point rate hike. You want to see some Fed speakers start to dissent. If everyone is in line with they should have done a 75, they're in line with large rate hikes still for this foreseeable future, things like that are going to be seen as a negative for the stock market. Now, if we go ahead and take a look at the Ortex data for AMC, we're looking at 20.16% short interest of free float, about 104 million shares that are sold short. Now, you are seeing the cost to borrow max jumping yet again today at about 83.42%. And yesterday's number was at about 53%. So a decent size jump here, a 35-40% jump in the cost to borrow rates just alone. Cost to borrow average, again, jumping as well, going from about 45% yesterday to about 53% here today. And cost to borrow minimum at 36.6%. Again, jumping here today from about 29.5% yesterday. So all encouraging signs. And you are seeing about 750,000 shares that are available to be sold short, apparently, as of today. You're still seeing a cost to borrow rate that is going up on the trailing 3-month average at 32.08%, 100% shared utilization, days to cover at 6.21, and the free flow out on loan decreasing a little bit here today, sitting at just about 35%. So all of these factors look very encouraging. Positive order value for the day sitting at 55%, 3 orders totaling $51.31 thousand. Obviously not a big day as far as options are concerned, but nonetheless, that is what we have been seeing, and this is kind of what I expect in this time period where you're just getting into Thanksgiving, and then after that you got Christmas. A lot of people go away for the holidays. There's a lot less volume that trades on the stock market around this time of the year. That's why you tend to get the Santa Claus rally. Now, as far as the total open interest of calls and puts for this Friday's expiration, if you guys have not seen the prior videos, 65.71% is held on the call side in open interest, and about 34.29% is held in the put side for that open interest. If we take a look at the Stonko tracker data as well, turn on dark mode because that looks hideous. You can see calls that are in the money for this Friday sitting at about 41,000. Calls that are out of the money sitting at 181,000, almost 182,000. Puts that are in the money about 39,000. Puts that are out of the money about 85,000, 85,500 puts, guys. So those are really the big things that are happening here today. As you guys know, it looks like AMC has brighter days ahead. That's no surprise. We talked about that in the last video. If you have not seen that, then definitely go ahead and take a look at it. But nonetheless, the big catalyst for tomorrow is going to be the FOMC minutes, as well as those other smaller catalysts. You're going to get a big move tomorrow based off of that. And some people are saying that the FOMC minutes could crush the markets, especially if you do get a 5 to 7%, or even I should say 6 to 7% indication of the federal funds rate, the terminal rate in which the Fed is going to stop raising rates, not necessarily cutting rates, but stopping raising rates. That's going to be a very negative thing. And still, the same logic applies for any of your trading in AMC, in my personal opinion. As long as AMC remains above the 50-day moving average, I think the risk to reward ratio to remain long on some of your options trades on, trading the stock, whatever you're doing, makes a lot of sense. If this stock breaks down and closes under the 50-day moving average by a, considerable amount, right? As long as you don't see one of those wild wicks like we're seeing almost every single day to the downside, and then to close back to the upside above 50-day moving average. If you get a solid close under that, that would be a pretty solid indicator, in my personal opinion, to get out of some of those long positions and potentially head for the hills, because it would be breaking down on a technical basis at that point. But as of right now, remaining very bullish on AMC stock, guys. So that is going to be it for this video. Hit that like button and subscribe to the channel if you guys have not already. Thank you for watching, and I will see you in the next one.